Hey guys, welcome back. In today's video, we are talking about the AMC upgrade, how retail owns AMC, why the shorts are blowing up, and many more in this video. First, we're taking a look at this. So AMC is rolling out cutting edge tech where we're seeing the panoramic screens in the Denver areas. And this is something that we have seen in the past before. Now, just 2 years ago, just a year ago, when we saw a piece of news like this, there was always people trying to say that this was a bad idea, that AMC should spend their money elsewhere. But, and especially for the ones who were doubting this before, I hope with the recent news in terms of the record revenue, the record attendance, and how the box office is booming, you have changed your mind on this. Now, this is something that I definitely want to see. This is the improvement and investment into the infrastructure that we have always been talking about. Because the reason why I say this is we have already seen from data that viewers want to go to more premium theaters to have the best movie experience ever. And this is what AMC is offering. And precisely as we see how the box office is growing, how the box office is getting even bigger, and more people want to go and watch more and more movies, things like this are extremely important because it's essentially is what allows AMC to get the majority of the market share. It's how in the future, as we see the box office get even higher, how AMC is able to get an even bigger portion of that revenue. And so this is something that already has been proven to be working before. The biggest reasons for why we have seen AMC having record attendance is because they have invested into these premium theater screens, which has attracted customers to go and watch it. And then we obviously go from there in terms of understanding the revenue as well. The reason why we're able to do this is because they are willing to invest in profitable theaters, which in returns are theaters like this as well, but also improving the previous theaters that they already have owned. And so this is exactly what we want to see. And essentially go into the future in terms of, am I expecting the revenue to get even bigger? Am I expecting the market share of AMC to get even bigger? Of course, because they are investing and improving the right things at the right time to make sure that they are positioning themselves so when the box office get even bigger, they're able to get the bigger portion like they always have been. And so a big thing for this is that before this, they told us that AMC was going to go bankrupt in 2021. It went from $1 to 70. They're now telling me AMC is going bankrupt at 268. I'll play this game. Less debt, stronger box office, 7x more shares for myself. And a thing that we have seen from this as well is that we have seen multiple institutions, whether it's just trying to long AMC, or whether it's flipping their short positions into long. These are all very good indications of what people believe AMC is going to go. And I think that has always been the biggest indication. We don't care about what the media is trying to say. We care about what is actually happening to AMC. And so whilst the media is screaming, don't buy AMC, the institutions, the actual money are doing the complete opposite, where they're trying to accumulate more and more. Now, the fact that they're trying to say that AMC has no future, the fact that they're trying to say that we are looking at a weaker AMC, despite the fact that we talked about record attendance, record revenue, we are still seeing AMC improving. We are still seeing the box office get bigger. There is not an ounce of news out right now in terms of what talks about the negatives of AMC, in terms of what it's hinting at any caveats in the future, because as of right now, there isn't. There is things that AMC can improve. This is the debt, but we have already seen how they have improved it. In terms of any immediate warnings that we need to look out for, to me, there hasn't been any that is detrimental to AMC, nor anything that has popped out to be of anything. And so this is the thing that we talked about with how media is obviously not trying to say the right thing. And a big thing for this is that as we see AMC do this well, as we see AMC go into the future, as we see the box office get even bigger, shorts are worried. Institutions and market makers are worried. It's why we're seeing AMC going over 70% off exchange. And this is during the time where the company is breaking the 106-year record. So when a company is breaking records, when the industry that it's in, it's booming and it's becoming more and more efficient, naturally, you would think that people are buying. And this applies to every other industry out there as well. Now, the same obviously goes for AMC as well, because it'd be dumb of you to look at a company to do so well and not buy into it or not look into and invest into it. Now, like I said, AMC is obviously in the same thing. The difference is that they know that everyone is buying. And so they are trying to push the dark pool up because they are afraid of what's going to happen to AMC if they fully let lit exchange go through. And now, despite everything right now with what's going on, I think today is a very good showcase of what's actually going on for AMC. So firstly, we are on pace for the lowest volume in months. Now, you can see today already 64%. Now, for the off exchange to see 64%, again, normally it's not normal, but for AMC is normal. And we've already seen what happens when AMC sees a 40% lit exchange. We talked about the 15% increase in AMC. And so this is just another showcase of how they are manipulating. But the fact that we are seeing low volume, now bear in mind, we should be seeing low volume. The reason why I say this is because AMC's float has already been bought up by the retail. Not today, not last week, not last month, but for a very, very long time. And it would be natural to see AMC has low volume because the retail is holding onto their shares. Now, the reason why we do see, in terms of where there are days with increased volume, with immense volume, is obviously because of the high frequency. The thing is that on these low volume days, it shows exactly what is going on with the off exchange. It shows that they are trying to hide the truth away from AMC. And you can see how on these days where this is off the back of AMC just announcing record revenue, record attendance, and we still have more and more movies coming out. We still have Q3 that is going to do exceptionally well. We're suddenly seeing low volume. Clearly, it doesn't make sense. And the reason why this is happening right now is because they don't have the facility, they don't have the allocations of capital right now to manipulate AMC as much. And we'll talk about that later on in this video as well. But the fact that we're seeing this happening right now, this is very normal in terms of to see the low volume. But what's not normal is the fact that this is off the back of a record attendance and that we are seeing a red day because we are attracting people. Why would you not buy a company that is showing it's breaking records? It clearly doesn't make sense. And when we do see volume coming in, why is it going through off exchange? And even on a day of such low volume, why is it still majority off exchange? And all of these is just pinning back to what we talked about with the suppression, with the manipulation. And you can see what they're trying to say right now. They're trying to say that AMC is overvalued at 51.6% overvalued. Now, this is obviously ridiculous because when you take a look at Cinemark, when you take a look at IMAX, and we talked about this plenty of times before, but I think it's important to take a look at the comparison, is that they are all going up higher and higher, yet no one is saying that they are overvalued. The reason why they're not overvalued is because they're in an industry that's booming and they're benefiting from this. Now, they're trying to say AMC is overvalued despite the fact that we are experiencing the same thing. It goes on to talk about what these articles are really trying to do, what they're trying to push with the agenda. And you can see box office is surging. We are seeing the rating of AMC to increase. We are seeing the revenue to increase, the cash flow to increase, the margin to increase, the debt to decrease. All of these things are all showing the positives, yet they're still trying to say AMC is overvalued. And you can truly see how ridiculous that is. And when we go into the Q3 earnings, it's very likely that AMC will break Q3 records as well. But despite that, they will still continue to tell it's going bankrupt, just like we've seen from this article, because Q2 has already been a record Q2, yet they're still trying to say we're overvalued. But they don't say the same about Cinemark, they don't say the same about IMAX. So when we go to Q3, we are going to be looking at an exceptional result. I'm already extremely, in terms of believing in that. But they are still going to try and say that AMC is overvalued. They're still going to try and say that there is nothing going on with AMC. And you have to understand the reason why they're saying this is not because they truly believe that, but it's because they have to believe that. They have to want people to think that AMC won't go up any higher when the whole world obviously knows the truth. And so to say this is that we have to remember retail owns AMC. Prove me wrong. So if you're one of those people who thinks that retail doesn't own AMC, again, I'm curious to hear your reasoning on this. Now, I'm sure many of apes would have already commented or understand why retail owns AMC. We can talk about in terms of what has happened in the last few years. We talk about the OBV. We talk about how the fact there's never been more selling than there is buying. So when you talk about all of that, we know that the retail owns AMC. Yes, there have been some dilutions where more shares have come into the market, but we still have to understand that apes are willing to continuously buy and that we are even buying up the shares that some institutions are selling. So the people who try and say that retail doesn't own AMC, it baffles me, but that's why I'm curious to hear the reason why you're saying this. Now, another thing that we're looking at is the total return swap. And this is actually very important in terms of the TRS basket, because we have talked about this in the past before. This is an update. So this is from Samuel, who's given an update on the AMC basket, updated just last month. Now, you'll see some new names in there. You can see firstly AMC's in there, and then you've got some mixture of other stocks like American Airlines, like Open Door, like Grab, and of course others. And this total return swap basket is important. Firstly, there are other baskets out there that we have talked about, but this is just one that we have seen in the past before. And the reason why this is interesting is because of everything that's ongoing. So I'm showing you right now about the Japanese bonds. Now, this is got to do with the total return swap basket. So don't worry about it, and don't think I'm changing the subject because it's the same. So first we have to understand is that in Japan right now, things are getting worse. We're seeing the bond market, we're seeing the bond yield, we can see how it's increasing. 2 years at 1.57, 5 years at 2.098%. So this is showing, along with the Japanese yen, why it's getting worse and worse. And a big thing for this is because they're worried how the Japanese wobbling yen could trigger a global financial crisis. So one of the things we've been looking at recently has been the Japanese yen, and it has been extremely volatile. And despite the government intervention, especially from the Bank of Japan, which are trying to keep it down, they're failing to do so. And we talked about how the US is obviously trying to intervene as well. And you have to then understand, if they're trying to do this, it's because they've realized that at this rate, they can't keep it up any longer, and that it will cause a massive global financial crisis. And you can already see in terms of the intervention that's going on. And this is what we talked about with how the market and the intervention has to do with one another, how collaterals can easily evaporate, and we're seeing the market in turmoil. So why are all of these important? So you just seen the effect of what happens when the Fed intervenes in yen, or may intervene in yen. We talked about how the bond market is going worse. We talked about how it could just trigger a global financial crisis. So the reason why this is important is because it impacts AMC. And so this goes back to the basket that we are just talking about. So what we have to understand is that because of the structure of the offshore TRS deals, when we take a look at the funding side, large pools of capital borrow yen at extremely low cost. They convert it to USD and then take on exposure in high volatility assets. The real instruments deployed aren't direct stock purchases or securities lending, but total return swaps. TRS can synthetically create long or short positions with nominal principal that can be scaled massively. So here is the thing. We are just seeing right now how the total return swaps can synthetically create long or short positions. And just like we talked about with the AMC total return swaps, and we look at the keyword of synthetics, you already start to see what's going on. Secondly, they're parking it in places like the Cayman Island or Luxembourg. And in the basket, you can see 2 Cayman ordinary share securities. Now, this isn't the important part. The important part is that it's offshore. And the reason why that's important is because in offshore, what we can see is that it bypasses the US short position reporting system. Official short interest data doesn't even glimpse the full scale. So it goes back to what we were saying with how, once again, the short data that we're looking at is not true. It is not even near what is actually being going on with AMC, because at the end of the day, it's self-reporting and they don't have to report offshore shares. And so this is already a big part of what's going on. We see how TRS can create synthetic shorts, and then we can see how offshore positions doesn't have to be reported. And so it exploits differences in margin requirements and capital adequacy rules across jurisdictions for regulatory arbitrage. And you can already see how things are going on here. And one of the things we talked about with the swap is how they use it as collateral to then put it and short AMC in different layers. And now, this is why we were talking about everything earlier. This plays a big part on the Japanese yen. They were using this to fund everything. A lot of the synthetics created for AMC, especially the ones in the basket, are done predominantly by borrowing yen and then converted to USD to then short AMC. So as we see the yen go up, as we see the intervention, you can see how the market is happening. You can see how the bond market is being volatile as well. As we see the yen go up, we are going to be looking at them struggling to actually then put the same position they have because their collateral is evaporating in value, not only in the US, but also because of the Japanese yen. And all of this equates to the fact that they won't have the ability to short AMC as much as before. They won't have the capital needed to manipulate AMC as much as before. And so earlier, when we said, why are we seeing a low volume despite what's happening with AMC? It's because they aren't able to locate the money needed anymore to short AMC. And that is playing a big part. And it's why we've said that in Japan, it actually has a massive effect to whether or not AMC can squeeze. And this is what we talked about with how shorts are blowing up. Now, as always, none of this is financial advice, and I'll catch you guys next time.